It's still a struggle to understand exactly what the objective is with
Exactly.
these tariffs. I think, for the most part, we've been taking the approach that, for the most part, we kind of believe the U.S. president is, pro-growth enough, pro-business enough that while there will be a lot of noise, in the end, we kind of believe that he won't try to damage markets that badly. But on a morning like this, we are concerned. And not knowing the
Yes.
real reason for these tariffs is a problem because if it's truly that he believes this is a revenue generator, then these are going to be around for a while, and then we will be downgrading our growth estimates and we will be increasing our inflation estimates. On the other hand, if this is about some negotiation ploy to get Canada and Mexico to change their border
Yes.
policies to some degree,
Tony,
then it could end in a couple of weeks.
ultimately, the transmission mechanism for us in the APAC is going to be through a stronger exchange rate. It's going to be through a stronger dollar. How much of a problem is that going to be for us in terms of outflows, in terms of eroding domestic purchasing power in China and elsewhere? And how do we mitigate that risk then? And if this is ultimately a lot of noise, and if this is ultimately a buying opportunity, if you do have a strong stomach for the volatility, then where are the most compelling opportunities?
Yeah, so I mean, we still argue that we like global equities, and we would start with the U.S. We've been pretty positive on what we've been seeing in Asia. We like the growth trajectory. We generally like Asia when interest rates are coming down, and we saw that by the end of last year, Asia was one of the outperformers in global equities. But as we start the year, we've been talking to clients that we're kind of more neutral Asian equities, and we kind of think Asia is kind of more of a second half story. For the first half, I think, like most investors around the world, we're overweight U.S. equities. And the earnings story, the lack of recession risks really kind of just add up to being very solid. And I think you said it well. If in fact we can get through these risks, if there's some deal to be done in the next couple of weeks, then I think the outlook is really smooth sailing. If in fact this is going to be around for a while, then that's a bit of a headache, and we would be downgrading growth forecasts.
Hey, Tony, good to see you again. Listen, I haven't done it for a while, so let me hold your feet to the fire, right? You're overweight equities. You think Trump is going to be pro-business and pro-growth, et cetera. And, if there are inflation worries out there, deficit worries, look, the bond market and bond vigilantes, they're going to handle that, right? And you're saying that, look, 5%, hey, it's pretty good if you're looking at clip coupons. But the problem for me is, look, if we do get the 10 right now is at 454, right? If we do hit 5, if not north of that, isn't that going to be a problem for equities, though?
Yeah, I do think north of 5% on 10-year bond yield does become a headache for equities. We don't really expect it. In the end, while inflation isn't improving very rapidly, we kind of expect it to be in this sort of 2.5% type range throughout this year, which I think limits the amount of rate cuts we can get. Maybe just maybe one or two more, and that's really all you're going to get. And you're going to see, I think, like a plateauing of interest rates, sort of like we saw in the 1990s, where after a series of rate cuts in 95, then they were kind of just maintained for years. And I kind of think that's the backdrop we're investing in. And if so, I don't think you get really north of 5% on the 10-year without rate hikes. And I just don't think the inflationary backdrop is pointing to that, even if you add in tariffs and so forth. So right. I think you're right to say one of the things that gives me comfort is I do think the bond markets are going to be sort of the ultimate check on Trump policies that at time can be a bit worrisome. But I think there's a limit to what he can do without the bond markets rebelling too much.